Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Jonathan Twombly. Thanks for being on the show, Jonathan.
Thanks for having me, Whitney.
I was just telling Jonathan, I've seen him everywhere. I know he's seen me, but we've never met in person. So I'm honored to have him on the show. He's definitely an expert in this space and can provide a ton of value to us today. So a little about Jonathan. He's a multifamily real estate investor and founder of Two Bridges, which works with pre-qualified investors to add high-quality real estate to their investment portfolios. He became a full-time multifamily investor in 2011 and helped form an investment company acquiring Class B and C multifamily residential properties in Louisiana and Texas. He also held a 12-year career as a corporate attorney for some of the most prestigious law firms in New York, Boston, and London. Jonathan, thank you again for your time and sharing with us today. You know, the 12-year career as a corporate attorney, that's got to be very helpful in this real estate business, but thank you.
Yeah, no, thank you for having me on the show. It's great to finally meet you in person. I mean, like you said before, we've been sort of like around each other for a long time without meeting each other. So it's great to finally connect. In terms of, that the legal career, how that helped, it helped in ways that people are surprised by. Frankly, I'm surprised by the way it helped. People always assume that, you're a lawyer, so that means that you do your own legal work. You can save on legal fees. As a matter of fact, I don't do any of my own legal work. I can't even stand to read the documents. I force myself to do it, but I don't like it. That's why I left being a lawyer. If I liked that stuff, I would have stayed doing that. I hire out to do that, and I really advise everybody else to, don't try to, take it from the lawyer, who could do his own legal work if he wanted to. I'm not an expert in syndication law. I'm not an expert in property closing law. So I would not take that task upon myself to do, and neither should you, especially if you're not a lawyer. But the way that it has really helped me is more in terms of my approach to clients, right? So like how seriously I take that client relationship. I treat it in the same way that I treated it as a lawyer. So, as a lawyer, you have a very high, the irony is people have low opinions of lawyers, and I think it's because they deal with the ones at the bottom of the profession for the most part. But lawyers actually have really very high ethical responsibilities, and they should be trusted advisors, and they really should be treating their clients as like kind of a level above themselves. And I feel the same way as a syndicator. I have a very strong sense of duty and obligation to my clients, and I don't treat them like they're just a means to an end or just like a dollar. Some guy who writes a check and it's okay. Here's another. That face has got $50,000 written on it for another unit of a property. I really feel very strongly that I have a duty and an obligation to steward that money the same way that I would, steward somebody's confidence in me as a lawyer, or steward their legal case. So that's how it's really come into to be most helpful for me, is that the kind of like approach to how you handle clients.
Yes, I'm sure it helps you to have lots of good questions as well for your attorney, just understanding you're going to have a much deeper understanding of a lot of the legal jargon, for better words, than somebody like myself, so.
Yeah. I mean, I'm not intimidated by the documents, put it that way. Like I don't I understand them when I read them. It's not really an issue. But funny, like another way that the legal career has helped me has actually been in my role as a podcast host and hosting panels and things like that, because I was actually a litigator, did a lot of deposition work, was always asking people questions to try to get information out of them. And I just became very good at just sort of like following up with people and asking questions and kind of staying on a thread. So, I can let people go off on these big, broad tangents, and then like I know how to bring them back into the core of the story and stuff. So that's actually been very helpful too. And I would not have anticipated that being a litigator was going to help me later as a, like a podcast host. So,
right. So why don't you tell us a little about your transition though into real estate and why moving into real estate from being an attorney?
Well, I had, yeah, like I said, I practiced law for 12 years, but I pretty much burned out on it after about 3 years. And I spent a long time trying to figure out what the next step for me was going to be. And um, I became interested in investing, not necessarily in real estate, but I just became very interested in investing in general. I like economics, I like talking about the market or thinking about the market. I like thinking about how economic forces play out and how you can make money on it. And um, I become very interested in some kind of investment career. And right at the point where I really thought, okay, I'm going to try to make a transition into this, then the great financial crisis happened. And, uh, I was out there trying to do sort of like informational interviews and stuff, but people were telling me, first when I started thinking about doing like some kind of like equities analysis, and then later when I thought about real estate, but I was getting the same message, which was, look, Jonathan, you have a great background, a great resume, but at your age, and I was 40 at the time, or almost 40, at your age, it's going to be very difficult to break into this field because you're going to be dealing with some manager who's like 10 years younger than you, who's not going to feel comfortable bossing you around. They're not going to want to hire you for that reason, or you're like, you've got children, some single guy with no family who's willing to work 24 hours a day it's going to feel weird about asking you to work late, that kind of stuff. And people just aren't going to hire you. And I got the same kind of message. And then on top of it, there was like the financial crisis happened and there were like tons of people on the street looking for jobs who weren't career changers. They had 10-year resumes in the business, right? So people were saying to me like, hey, you're not going to get hired to do this kind of work because of all these different forces. So I kind of retrenched, kind of put my head down in law for a little while longer, but fast forward a couple of years, the financial crisis, kind of the worst of it passed, but at least the law firm I was working for, their litigation business just didn't really pick back up again. And I was kind of sitting on my hands making a really big salary. And you could just see like, it kind of puts a target on your back when you're in that situation. So I wound up getting downsized in 2011. But at that point I was really done. Like I just couldn't face any more of a legal career. And I remember sitting there thinking like, how on earth am I going to get somebody to hire me for a job that I don't even want? How do you come across as wanting a job that it's like the last thing you want to do? And so I realized I really had to make a change at that point. And I started doing a lot of networking in the commercial real estate space, thinking that that's what I wanted to do. And then I got that same kind of, it was like deja vu all over again at your age with all the guys on the street, blah, 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 blah. The only way that this is going to happen for you is if somebody just takes a liking to you and offers you to become your partner. And lo and behold, as I was out there doing all this networking, I came across a woman who was starting a syndication business. Her family owned a bunch of real estate, but she wanted to do it on her own. Her husband was like happy with like the 700 or 800 units that they owned, was making plenty of money, didn't want to make a business out of it. He was just like, why should I work harder? She was like, hey, I want to make a business out of this. She went to some guru stuff, went to a guru seminar, learned how to do syndications, and we met, and she was like, hey, you look like a guy who can raise money. Why don't we team up? And this was happening at the same time as these people were telling me like, hey, if you don't find a partner, you're not going to get anywhere in this business. So those two things happened. And the third thing that happened was I wanted to do my due diligence on this potential partner. So I started introducing her to some friends that I trusted to get their read on her. And they all came back and said, hey, we think she's great. She really knows what she's talking about. If you decide to join up with her, I will write you a 7-figure check to like invest. So here I was, like, I didn't even have the partnership set up yet, but I had $2 million raised. So I guess she was right about me being able to raise money. And so I thought I should try this, right? So that was actually how I broke into the business. And she was already owned a bunch of real estate in Texas and Louisiana. So we started looking down there and trying to do deals in places like Houma, Louisiana, and Lafayette, Louisiana, and stuff like that. But that was how I actually got my start in the business.
I think it's an interesting point that you brought up there, though, that you ask a few friends or trusted friends to evaluate this potential partner before you just jumped in, and that probably comes from your attorney background a little bit as well. But I think that's a great I don't know, some great value there, because most of the time we're trying to evaluate that potential partner ourselves.
Yeah, I mean, I'm kind of a cautious person by nature. You probably know that from reading the stuff I put out there. And so I wanted to like get a second set of eyes, so to speak, on the situation. And just, I also felt like at that time I was a little bit out of my element. Like I was coming from this legal background. I'd never been in business before. I didn't know what I should be looking for. I just wanted to get some additional feedback before I jumped in and made this big decision. And so the people that I had her talk to, like one of them was came from a big real estate family in Japan. Another one was like a very successful equities investor here in New York City. And I thought that these two guys would have a good, ability to kind of, because everything she said sounded good to me, but I didn't know if she was full of it or not. So I wanted to have her be vetted by some people who I thought had a better opportunity we're in a better position to kind of evaluate what she was saying. And she passed the test with both of them. So, so there we were.
Nice. Okay. So you jumped into the partnership and you started growing a syndication business, and then walk us through that a little bit. And what were some struggles at that point, through the partnership and then trying to grow this business?
Yeah. So that was just the first stage. I mean, I've been through a whole bunch of ups and downs. I feel like honestly, like mostly downs in the business, but so we started looking for deals using her contacts, and we just had, we were having no luck at all. Right? We were talking to brokers. Brokers were not giving us the time of day. Didn't matter that we could provide proof of funds and all that sort of stuff. We had the money lined up, but we were new, right? Now, remember, this is 2011. It's a very different environment than it is right now. People are throwing money at multifamily, right? Kind of we're in the opposite situation. But in 2011, we're still fresh out of the financial crisis. It still feels like we're in a financial crisis, even though the economy had technically been growing for a couple of years. Everybody was scared. And the brokers were not willing to take a chance on people who they'd never heard of, who they didn't know if they could close or not. So it took us about a year before, and then the other thing was that the pricing was crazy because people were still expecting like the bubble pricing. So everything was priced with these bubble prices attached to them. And we're like, none of this makes sense. Plus, why am I paying that? That's the 2008 price. I'm not paying that. So it also took a while for the sellers to start getting a little bit more realistic about prices and brokers kind of trusting us. So it basically took a year until we found a deal. It was basically a deal that had sat on the market for a very long time. And we looked at it and we didn't like it at $4 million. But when they dropped the price to $3 million, we're like, oh, okay, this makes sense. So we went into contract on that deal. And then very soon thereafter went into contract on a second deal with the same seller. Both of them were in Louisiana. So we thought like, hey, we're ready to go. We've got the deal, we've got the funds lined up. We've got the deal, we've got the debt lined up. We've got the credit partner lined up. We had everything lined up, ready to go. And we were just at the very end of our inspection period when the lender pulled out of the deal. And so there we were kind of like, lost our financing.
Mode.
Yeah, panic mode. And we scrambled around and tried to find another lender. Unlike today where lenders will lend on anything, anywhere, it seems like the lenders are like, Louisiana? Huh? Like they wouldn't touch the whole state, and we actually, I'm not really sure why we didn't try to go for local banks. We were trying to do Fannie and Freddie debt. But probably just because the pricing was better. We didn't want to, we wanted to do non-recourse, but we didn't think about that option of trying to find a local lender. But, we were kind of done. We were out at Fannie and Freddie, and we had to terminate the deal. And unfortunately, we got our deposit back because we still were within the inspection period. And I think, in those days we also had, you could get a financing contingency. So maybe we invoked the financing contingency also. But, we were out a lot of money from all of our deal costs, legal fees, you name it. So it was an unpleasant experience, not to mention the fact that I'd gone a year without getting paid. So it's just living out of savings. And this was going to be the big payday when we got the acquisition fee on the deal. And that didn't happen. And then we wound up, when we got into due diligence on the second deal, we backed out of that deal because we found something we didn't like about the deal. So here we were again, we got the deposit back, but we were out of all of our expenses. And so now we're a year and a half into this project where not only have I not made any money, but I'm out of pocket for a significant amount of my savings, right, from the fees on the deal. So rather, at that point, we decided also that, during the course of working together for a year and a half, we discovered some kind of some philosophical differences that we had. And we thought, this is kind of a good opportunity for us just to wind up the partnership. So we did. At that point, after we lost those two deals, we thought, okay, why don't we just move on to other things? So we scrapped that partnership. And so shortly thereafter, this is kind of the end of 2012, I was out again with one of those original two guys who was going to invest with us. And
so you're still deciding to keep moving forward with real estate at this point?
I still wanted to do it. Yeah, I still believed in it. I still wanted to make it work. And so I was out to dinner with one of those two original investors, and they hadn't lost any money because we had never called for funds for them. We had used our own money to tie down the deals and stuff. But I was out for dinner with one of them, and I was like, "Hey, I don't know what I'm going to do. I might have to go back to practicing law." And he said, "Slow down. Don't be so hasty. Why don't you and I partner up instead? So I'll back you if you start a new company." So I did. So that's how Two Bridges was born, from that relationship.
Wow.
So I think the lesson there is, again, do right by your investors. We didn't lose our investors any money. Everybody stayed with me. We didn't put them in jeopardy. We put ourselves in jeopardy and took the risk. And I think that then led to, not only did I learn a hell of a lot from being in the business for a year and a half and looking at deals, underwriting deals, and taking through due diligence, also almost up to closing, every kind of due diligence, legal, physical, lender due diligence, everything. I mean, everything but the closing. I learned a lot on my own dime, and I think that also gave people confidence. So, their money was safe. I learned on my own, and then they were ready to kind of go further with me after that. But it's not I recognize not everybody can do that, right? I mean, I was fortunate. I had savings. I was able to finance this myself. This lifestyle was not easy or pleasant, but I was able to do it. So
you had mentioned that the first opportunity at 4 million didn't make sense, but at 3 million it did. And I was just thinking about, that time period, 2011, how did you know what would make sense at that time?
Well, it was just the underwriting, right? I mean, we were looking to buy deals that were going to return a certain amount after the investors got paid, after we got paid. We just had metrics that we had set up for ourselves that would pay a certain amount. Now, knowing what I know now, when we were underwriting those deals, I remember looking at them going, this can't be true. This can't be right. This deal's going to make so much money. It just can't possibly be right. But I would underwrite and re-underwrite, and it kept on coming up, that way. And I remember when I took the deal to my investors, I intentionally made it much more conservative, because frankly, it's if they're not going to believe me if I tell them how much money this is going to make. Now, looking back on things, I think we probably left a lot out because we were just inexperienced underwriters. And probably it was really on the CapEx side of things that we underestimated the cost, because these were old buildings. They were 1970s properties. They were rough. They were not in great parts of town. They were kind of your typical stuff that a lot of people are starting out with. And I'm sure they would have been a lot more expensive to run than we thought they were going to be. and there were other expenses too that, I think we were just, we were taught like use the seller's numbers, buy on actuals. And that's not the best of advice. Actually, it doesn't work out that well when you've got a seller. This was like a seller that owned several thousand units. They were self-managing. They weren't paying for a management company. They could do a lot of stuff on the cheap. They weren't spending any money on the properties. I can tell you that. So we could not have reproduced that cost structure. Yeah.
So it sounds like, I mean, for a good period there, almost 2 years or so, I mean, it was just like, I don't know, you just kept getting hit down, knockdown after knockdown after knockdown. Before, obviously, you had a great relationship with this other guy, thankfully, who believed in you and was able to back you, and you all formed Two Bridges. But and obviously you gained probably a lot of education about the real estate business the hard way, it sounds. But what was it? I mean, that kept you going. I mean, through that, or what would you do different or recommend to somebody that's experiencing that right now?
Well, what kept me going through it was the utter desperation about the idea of having to go back to being a lawyer. I'd been so unhappy doing that, comparatively speaking, I was a lot happier, even though I wasn't making any money, and I wasn't, like I was in control of my life, in control of my time, was building something, and I was building something for me that I was going to benefit from. So that kept me going through those tough times. But I mean, it was rough, and my wife was not happy about it. And, it was not easy. So you have to be, prepared to put up, to take your knocks. Now the knocks that people are taking are, you can't find deals. You could find deals then, but I think that, people finding deals now, they're paying a lot for deals. I think people have unrealistic expectations about how much money they're going to make. And right now everything looks rosy, but we'll see how it all shakes out in a couple of years. But for, my advice for folks who are starting out though, really is like, keep your day job. Like I was in kind of an unusual situation where I was, despite the fact that we live in New York City, like we really live very cheaply. Like, we spanked most of my salary, had very, very modest lifestyle. We didn't amp it up the way that like most of my colleagues did. We didn't even own a car, for instance. We didn't spend as much money as we could have spent intentionally. We wanted to have a lifestyle where we could save money. So that enabled me to finance going out on my own. But, you need to have that. If you're going to go and just jump into this full time, you got to have a way to support yourself, because it's not going to happen fast, right? You have to be prepared for this to take a few years to get any traction. And even if you do a few deals, you're not going to be supporting yourself on one or two deals either, right? So I would say, like, do this slowly, where you slowly build up a portfolio until it can replace your income, and then make that leap. But I wouldn't advise doing what I did. But it wasn't, like I said, I lost my job too. It wasn't that I quit to do this. Like, I lost my job, but I was in a position not to go back to the job.
So then you all formed Two Bridges, and tell me about how you all scaled that.
Well, I mean, scaling is a relative term, right? I mean, this is not, we don't have thousands and thousands of units, but we did, build up to 400 or so units relatively quickly. And quickly is also kind of a relative term. It took, that old expression, like it took me 10 years to become an overnight success. It was kind of like that sort of thing where, again, I went to a new market. I didn't want to go in Louisiana and Texas because it was too far from New York City. And also, like, I saw the kind of feeding frenzy happening in Texas, and I really wanted to do something that was a little more under the radar. So I just, through the demographic research, saw that the Carolinas had really good demographics in terms of population growth. It was a lot easier to get there from New York City. So I started focusing on that, but that meant we had to start from zero again with brokers. And it took another like 10 months before I was able to get a deal under contract. Once I did that and we closed that deal, then it became much easier, because then brokers started bringing us deals. Once we became known in the market as as closers. So that was pretty easy. Like just getting those deals. We did, 4 deals in the next, we're all together in about 11 months. And, so that part of it was easy. In terms of like getting further though, then what I ran into really was a couple of things. One was that I hadn't built my investor network big enough, beyond those few people that I was relying on and some smaller investors. But I hadn't really invested the time, like I see you doing with your podcast, to really developing a big network, which is really important. I think if you're going to ensure that you close deals, like you need to build, because the number of people who are going to, or I should say, the percentage of people who are going to invest in any one deal you have is pretty small. So you need to have a big group of people that you can turn to, and a big network of other syndicators you can turn to. And the other thing is really, before 2016, I kind of dated 2016 as the year when all of the third-party fundraisers kind of burst upon the scene, and it became a lot easier to raise money because there were just so many people out there who just were doing nothing but raising money. But I didn't have connections with those folks either. So kind of part of it was I ran into some trouble raising money, and my big investors were done for reasons that had nothing to do with what we were doing, because they were happy with what was going on, but they had personal reasons that kind of kept them out. They didn't have enough smaller people on the side to pick up the slack. And at the same time, I also started feeling like, wow, the pricing is getting crazy. Like, and this was back in 2016. I felt like the pricing, I just couldn't compete for deals. Like I was getting outbid on deals by a lot, like I'd make best and final, but my offer would be $1 million less than the guy who won the deal. And then that guy was going to go then put like another couple million into CapEx on the deal. And I was just going to do it as a buy and hold with like a light, maybe some light renovation. So I started getting a little bit skittish at the same time in terms of just the pricing of assets and how much more expense, seeing stuff come back in the market as a flip at a higher price. And so that was when I kind of started pulling back and focusing on the one hand, building my investor base bigger for when the pricing got better. I honestly, if you'd asked me then, like, would I still be waiting for this to happen? And 4 years later, I would have said, no, there's no way it can last this long. And I also started focusing more on the coaching aspect of things, which is something that, I've kind of always wanted to do. But, that's kind of where we are. So I just operated the portfolio for several years, just ran it, learned how to become an asset manager, and eventually sold it all last year.
Wow. So, you a big problem there you said you had was, you didn't build your network large enough. And that's a common problem I see, and obviously something I've worked really hard at. And so I understand like it can be a massive time consumption, just building the network, but it's so important. And so what was the biggest thing you did to really start to build your network or to, fix that problem?
I just started getting out there and being more prominent on social media and podcasting and things like that, just getting the name out. So before, I made a big mistake when I started out, which was also, I guess, kind of ignorance, because I had not been in business for myself before. I didn't really understand A, the importance of marketing, and B, how you do it, right? So I was kind of in a headspace where it's like, well, I don't have a track record. What am I going to tell? Like, what am I going to be marketing to people, right? I didn't kind of understand that you're marketing to them like opportunity in the future, right? I was very hung up on like, I don't have a track record. Yeah, so I've got a couple of deals. Like, who cares? Nobody's going to invest with me because of that, which is wrong, right? But there was also the kind of like how you do it. And I think one big key to marketing, and I teach people this now, is like you've got to market. You have to market yourself, but you also you're not going to do the marketing unless you find a way that a marketing strategy that works for you, right? So it works with your personality. Now, I'm not the kind of guy who likes to go and like sit in a Starbucks and meet like 12 potential investors and like talk to them all day. Like just not, I don't like to go to networking events and try to like make contacts that way. It's just, I don't like it. All right. So, but I do like teaching, and I do like talking about the business, and I do like, you know, I like public speaking, you know, so I figured I had to go do something that allowed me to teach, that allowed me to talk to people on a, not one-on-one so much, but more talk to like an audience. And so for me, starting a Facebook group was a hugely successful operation. And just, you know, for me, it kind of fit very well with my personality, because I like to write, I like to answer questions, I like to talk about it. So the Facebook group format worked really, really well for me. The podcasting format worked well for me because I like interviewing people, like learning about them, I like finding out what makes them tick. By doing those things, I was able to overcome my reluctance to go out I should really be honest and just say like discomfort at like going and having like networking meetings with people, which I just didn't particularly like. By building an audience, that then allowed me to attract people who resonated with my message, who would then reach out to me, and then I could schedule an interview with them and, you know, sort of start the process of bringing them onto the platform. For me, that worked much, much better. But, you know, you have to discover what it is that works best for you. Some people really love like going out there and going to networking events and meeting people in person and meeting them one-on-one and building the network that way. And that's great. That's the way it was always done, right? That's the way it was before podcasting and social media and all this. That's how you built a business in real estate, right? And people still do that all the time. And I encourage you to do that if that's what works for you. But if it doesn't work for you, then think about something else. It could be blogging. It could be, you know, like what I've done with Facebook groups. I'm sure there's other ways I haven't thought about, but
sure.
Yeah,
I appreciate you elaborating on that, because that problem that you had at that time, I just feel like a lot of people right now, you know, the listeners are going to experience that if they're not experiencing it already, because your network is so important. And I think, you know, you brought up a great point where it's like, okay, these people trusted you and you were able to start that business and get into a few deals, but then all of a sudden, you know, I mean, people's lives change, things change, investors change, you know, their situations change all the time. So sometimes investors can invest, well, then it may be another year before they can invest again. And it's nothing against you, but, you know, their situations change all the time. And so getting into whether it's podcasting or blogging or something like that, it's a way to start to increase your network, no doubt about it. But unfortunately, we've almost run over on time. But just a few questions though before you, Jonathan, before we have to go. But you know, what's a way that you've recently improved your business that we could apply to ours?
Well, I would say that the marketing really is. Yeah, I mean that's really what I focus on these days. You know, planting the seeds for the future. So. Whereas before I did it backwards, like I kind of needed to get the water before I dug the well. And so I had the deals and I had a little bit of water, but I didn't really have a well dug, you know. Now it's really been focused on digging that well first. So when the pricing is more to my liking, then I'm going to have plenty of, you know, investor funds available to go and move on deals at that point. So I think, you know, sort of the slow approach, building your network is really critical. That's you got to dig the well before you need the water.
Yeah. People say, you know, the chicken or the egg, or the deal or the money. And I say, well, you know, or they ask, you know, do you have to have the deal or the money first? And because people always say, well, the money will come if you have a good enough deal. And I say the relationships come first.
Yeah, I mean, that's the thing that I used to hear that all the time too when I got into the business. You know, if you find a good deal, the money will find you. And the problem with that is that there's really like a second clause to that. The money will find you if you've built the network first. Like the money is not going to come out of, and frankly, like I got in trouble believing that, where I went into deals thinking like, it's a great deal. I know it's a great deal. We'll find the money. And we couldn't find the money. Right. So we had to walk. So it's because we hadn't built the network big enough. So the money will come, but you have to plant the seeds first.
Yes. So what's your number one thing that's contributed to your success now?
Which success? The success of the coaching business, the success of the multifamily business?
You can answer it any way you want.
Well, I'll answer it in a little unusual way. So like I said before, we sold our portfolio not too long ago and produced some really, really good returns that I'm very proud of. I don't think that, I'm necessarily a better investor than other people out there or smarter than other people out there. But I think what makes me a little different is that I was not afraid to make a decision to take profits when the taking was good and lock it in, and like basically not try to ride the market higher, grab every last penny that we might possibly get, but to like say, you know what, we're getting offers that I think are crazy, and that tells me something about the state of the market, and I'm going to take my opinion and turn it into action. And we produced a great result as a result of that, of making a decision. So I think that the ability to like step away from any kind of like greed or ego around more and bigger and better and longer and more units and stuff, and just say, hey, what's in the best interest of my clients right now? The best interest of my clients is to sell these properties for these offers we're getting and return their money with a big profit attached to it. Like that was what was responsible for that success. And then in terms of the coaching business, just consistency, just being out there day after day after day, like giving value to people, teaching them, and then they want more, so, but being out there consistently is really critical.
Well, that goes right into, I like to ask you, how do you like to give back?
Well, I give back all the time. I mean, I have a free Facebook group. We're going to hit 9,000 members pretty soon. I'm in there all the time, just like having fun, talking about multifamily, having fun talking about stuff that has nothing to do with multifamily sometimes, but just creating a big community that a lot of people feel that they've gotten value from. I'm very strict about curating the community. So I keep out spammers. I keep out people trying to sell stuff, except for me because of my group. But, I really take it very seriously in terms of creating a good space where people can really learn if they don't have the money to invest in a program or coaching or something like that. There's a lot of value in that group.
Wow. Well, Jonathan, unfortunately, we're out of time. I'd love to continue this conversation or potentially have you back on the show. But it's just incredible to hear your story, and even the 2 years of numerous, what felt like getting kicked in the face, where you kept going, and so not everybody will do that, and I'm thankful that you are able to share that now and talk about being able to finally buy the first property, and the guy that partnered with you and believed in you, and you all made it happen. And but tell the listeners how they can get in touch with you and learn more about you.
Well, yeah. So I offer a free download on my website, which is called The Ultimate Checklist to Buying Your First 100-Unit Property with Other People's Money. And it basically it's like a 9-page checklist. It literally has every single step in the process of syndicating a deal. You can get that for free on my website, which is Multifamily Launchpad, all one word, multifamilylaunchpad.org. If you go to that website, it'll pop right up, put in your email, and it'll be sent off to you right away.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.